381,000. So a bit higher than expected for the week ending December 24th. 375,000, as I mentioned, is the expectation from economists. The prior week, was also revised slightly higher to 366,000 versus the prior reporting of 364,000. So this trend is going a little bit backwards. But remember that this is all affected by seasonal hiring as well. And so that is going to factor into these numbers. But Sarah, so far, what reaction are you seeing in the markets?
Well, it looks like U.S. equity futures are pointing to a higher start on Wall Street, just off the high point of the session here this morning, but they are staying in the green. Remember, we got to put it in perspective. It's after the S&P 500, the Dow, and the Nasdaq slumped yesterday. The S&P yesterday erased its 2011 gains, so we're definitely seeing a rebound, even though those jobless claims numbers came in just a little bit below the economist expectations. Now, we also want to show you what's happening in the Treasury market. This is the best place to follow the instant reaction for U.S. economic data. We can see that they're completely flat. And this comes after 2 days of investors going into treasuries, buying them on all of those fears out of Europe. Keep an eye on the 10-year treasury yield right now. It is at 1.92%. It's an important level because 1.67% is the record low. And it speaks to how much nervousness there is in the system. So we're less than a quarter percentage point away from that. We also want to show you what's happening in currencies. This has been the giant story right now. 128.87 is your euro dollar. The euro is trading right now right near a 15-month low versus the U.S. dollar. The euro yen is the other big one because this is a decade low. It's a weak euro. It's a disappointing Italian bond auction this morning. That's the story. But U.S. futures are holding on to their gains, even though those initial jobless claims, Betty, disappointed just a little bit.